Morning, guys. It's Tuesday, September 16th, 5:25 a.m. Central Time. Grain markets are mostly higher this morning. December corn futures up 1 3/4 at 4.25. November soybeans up 3 1/4 at 10.46. December Chicago wheat up 1.5 at 5.26.5. December Kansas City wheat up 1.5 at 5.15.5. December spring wheat down 1 1/4 at 5.70.5. Direct farm payments in the news again yesterday. Why don't we start there?
So, USDA Secretary Brooke Rollins said Monday that the agency is working with Congress to decide whether to provide farmers with economic aid this fall due to trade disputes and weak markets. She noted that inflation, record crop prospects weighing on prices, and stalled negotiations with China are pressuring farm profitability. The ongoing trade war has cost U.S. farmers billions in lost soybean sales as China remains absent from the U.S. market. Rollins also stated that the USDA is assessing fertilizer markets to ensure fair pricing and exploring potential measures to alleviate the burden of high fertilizer costs.
I believe direct payments are coming. It's an inevitability. She's not going to go on record and say this and then not do it. So I think the payments are coming whether you like it or not. We ran a survey of our premium subscribers last fall when they were in the process of approving what they called the Farm Act. At the time, it turned into ECAP. At that time, of our premium subscribers that responded to the survey, 54.4% said, no, we're not in favor of these direct payments. I think that the numbers would be a little bit different if we ran this survey today because the situation has become quite a bit more dire in terms of amounts and what you can expect. Again, whether you like it or not, I think it's coming. Go back to MFP, which was the market facilitation program in 2018 and 2019. These were trade war payments. Those payments totaled $23 billion. The 2018 MFP program totaled about $8.6 billion, distributed in two tranches. The 2019 MFP program totaled about $14.5 billion, paid in up to three tranches. More recently, the ECAP payments, which went out this year, they were $10 billion in total. I think 85% of those payments have now been distributed. The remaining 15% is coming pretty soon. So based on history, I would envision a number when it gets thrown out, and it will be thrown out very soon. It's going to be somewhere in the $10 to $15 billion range, if I had to guess. Now, there are a number of impacts here. For some farmers, the payments will allow farming to continue for at least another year. It's a Band-Aid. The payments will probably seek to make farmers whole, essentially following what's very likely to be a year of losses here in 2025. However, the payments are likely to result in continued input price inflation, cash rent inflation, and land value inflation. Many farmers would argue that the payments help to keep, quote, bad farmers in business. The real winners here are input suppliers, banks, implement dealers. The vast majority of this money, when and if it's sent out, and I think it will be sent out, it's going to flow through the farmer and directly back to those sorts of people, the big input suppliers, fertilizer, seed. The banks in particular, of course, want their money back. And those are the people who are lobbying for the payments. It's the farm lobbies to some extent, I think, are behind this, but much more so the lobbies behind this are the banks and the fertilizer and the seed dealers, the large ag companies. So I think it's coming. It does have these payments, Mackenzie, they do have an impact on the marketplace. So you're a farmer, you're getting ready to harvest corn, right?
Mm-hmm.
And farmers are in a cash flow crunch right now. They need cash, and they're starting to pay for inputs for next year. They're starting to look at crop insurance and fertilizer and all that stuff. If they know that money's coming, they're going to be less likely to go sell corn and soybeans to generate cash flow. And that could have an impact on basis. It could have an impact on all sorts of different things in the marketplace. So there are a number of impacts here. I don't know necessarily if I'm a fan or not a fan of the direct payments, but it appears to be an inevitability.
President Trump is expected to speak with Xi Jinping on Friday. The announcement comes as U.S. officials continue trade discussions with their Chinese counterparts in Madrid this week. Trump described the talks as very good, though negotiations largely centered around a potential TikTok deal. Other key topics, such as China boosting its U.S. soybean purchases, were deferred, according to U.S. Treasury Secretary Scott Bessent. Another round of trade talks is planned for about a month from now, with Trump and Xi potentially meeting in person during next month's APEC forum in South Korea.
It's good that the two big guys are meeting in person, I guess, although I'm not like necessarily thrilled that the talk seemed to have centered around TikTok, and everything else was kind of secondary. China hasn't bought a single bushel of soybeans for current marketing year delivery. It could change, and it could change very quickly, but I don't see Trump giving in on this until or if he reaches a broad-based trade deal that's favorable for the United States. And that's why I think that these direct payments are inevitable. And you could see something like what happened in 2020. In 2020, we had the COVID relief payments. Farmers got a bunch of paycheck protection program payments as well. And then you had a trade deal, and you had a bunch of soybean purchases and corn purchases that China bought from the U.S. after that. If you look back at this chart, 2020 was the best year, and that was immediately following the signing of the phase 1 trade deal. So I don't know. We're still waiting, but I'm not super optimistic given what I read about it yesterday.
Soybean planting has begun in Brazil, according to well-followed private group Ag Rural. As of last Thursday, 0.12% of the crop was planted, compared to 0.06% at the same time last year. The group projects soybean production at a record 176.7 million metric tons, though dry conditions could pose challenges to planting progress. Brazil's first corn crop was 17% planted as of last Thursday, trailing last year's pace of 19%. USDA estimates this season's Brazilian corn crop at 131 million metric tons and soybeans at 175 million metric tons.
Crop estimates are interesting. You got to start somewhere, but what's more important and what's reality is that soybean acreage will increase. USDA is estimating harvested soybean acres for Brazil this year at 120 million and change, up about 3 million from last year. The trend and acceleration of planted acreage actually slowed just a little bit, but they're still expanding every year. And the white bars here in the United States, you can see we're basically flat. We don't expand soybean acreage. We've just been flat over the years. So, you're going to start to get into a Brazilian weather market a month or two from now, but it's a little bit too early for that.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about yesterday's premium video?
Chris Barron joined me yesterday to discuss the farm profit or lack thereof situation. Chris says that this is the worst scenario that he's ever seen in his career of running farm budgets. And he did make the caveat that he wasn't really around doing farm budgets in the 80s. There are very few people that are watching or listening were running farm budgets in the 80s. That was probably worse. But in that era from say like the 90s through today, this might be the worst that it's ever been, because not only prices are low in the trade war and that sort of stuff, but mainly I think the bigger issue is the drastic rise in input costs. We also took a bunch of mailbag questions from subscribers about margins and budgeting and all sorts of different stuff. Really fantastic stuff. Chris had a PDF that was made available and included a whole bunch of budgeting stuff that was an aggregate of his customer base. It was really kind of eye-opening. It's a bad looking deal, guys. If you want to see the premium stuff, go to standardgrain.com this morning. This is a $50 per month subscription. You can cancel at any time. There's no other fee, no other obligation. Nobody will try to say anything else. Joe, why would I sign up to watch this doomsday video about farm budgets? You can either be informed or you can be happy. You'd be much better off being informed. That's what Chris always says anyways. So check that deal out this morning, guys.
U.S. corn conditions were slightly lower last week. As of Sunday, 67% of the corn crop was rated good to excellent nationally, down from 68% the prior week, but still well above the 5-year average of 57%. The rating was the highest for the week since 2018. USDA estimates that 7% of the crop is harvested nationally versus 4% last week and 7% on average. Soybean conditions were marginally lower, with 63% of the crop rated good to excellent, down from 64% the previous week, but above the 5-year average of 58%. Harvest officially began last week, with 5% of the crop harvested as of Sunday, slightly behind last year's pace of 6%, but above the 5-year average of 3%.
I'm not going to talk much about the conditions. They've declined, but conditions decline seasonally. The trade now, I think, is paying attention to yield reports, what's being reported. And I don't like talking about yield reports because I feel as if they're often skewed. Like I feel like the worst stuff is what is vocalized the most. Whereas if there are good crops out there, people don't talk about the good crops. People post the pictures of the bad crops and the disease and the southern rust and all that stuff. And they post pictures of the yield monitor when it's underperforming. But when the yields are really good, that stuff's not discussed as much. So I don't personally love discussing yield reports. That being said, if you guys have yield reports, give us your honest stuff. Drop them in the YouTube comments, or you can email me info@standardgrain.com. Let's do wheat real quick.
U.S. winter wheat planting is behind schedule. As of Sunday, 11% of the crop was planted compared to 5% the prior week and 13% on average. Analysts had projected planting to be 14% complete. The U.S. spring wheat harvest is nearly finished, with 94% of the crop harvested as of Sunday, up from 85% last week and above the 5-year average of 92%.
All right, let's go to the crush report.
Alrighty, so NOPA released its August crush data yesterday. The U.S. soybean crush declined 3% from July, but was up a whopping 20% year over year, with NOPA members processing 189.8 million bushels in August. Despite the month-over-month decline, the crush set a record high for August and exceeded all trade expectations. End of month soybean oil stocks declined to 1.25 billion pounds, their lowest level since December 2024. Stocks were down 9.7% from July, but up 9.4% compared to last year. Stocks also came in below the average trade estimate of 1.4 billion pounds.
I had a good chart of U.S. crush versus exports over time that I neglected to include in our slide deck here this morning. Premium subs, you guys have that in your email. In any case, this is fantastic. We're crushing a lot of soybeans, as USDA has projected and has been the trend recently. We're using the soybean oil for biofuel. We're going to have to find a place for the soybean meal. We're going to probably export quite a bit of it, but this is all good news. This is the bright spot of the demand base, whereas exports are, generally speaking, the weak spot.
Tyson Foods will remove high-fructose corn syrup from its products by the end of the year. The move comes as the Trump administration has pressured food companies to alter the way that they manufacture products under its Make America Healthy Again initiative. Some of Tyson's products that contain the sweetener include frozen chicken tenders, breakfast sausage, and breakfast sandwiches. Corn syrup used to make food and beverages consumes about 3% of U.S. corn production. The Corn Refiners Association has defended the ingredient safety, warning that its removal could hurt U.S. farmers and lower corn prices by roughly 34 cents per bushel. Tyson also plans to eliminate the use of sucralose and certain artificial food dyes.
Tyson has a whole bunch of brands under its umbrella: Jimmy Dean, Hillshire Farms, Ballpark. There's probably some use of high fructose corn syrup in this stuff. I don't think it's really that high, though, compared to some of the other call them like processed food manufacturers, like a PepsiCo or like a Nestle or one of those. This was something that I thought was interesting. This was from a group, and I don't know if they're partisan or not, the Union of Concerned Scientists, that was published a few years ago. They estimated that Tyson's annual corn and soybean needs, directly and indirectly, account for about 10 million acres worth. They didn't put a bushel number on it, and I'd be interested to know. It's probably not public information, but directly, indirectly, meaning like everything that feeds into Tyson's kind of operations, like all the feedlots, all the chicken processors, all that stuff. So you could probably make the argument here that low corn or soybean prices would be a good thing for Tyson, and that perhaps there's some sort of like idea here that, hey, if we stop buying high fructose corn syrup, maybe we can buy our corn cheaper. I don't necessarily agree with that. I think this is kind of along the same lines of what Coca-Cola did. Was it Coca-Cola or Pepsi? You said they were going to get rid of high fructose corn syrup.
I think it was Coke.
But then they didn't. They just said they were going to
Right.
they're going to make an offering available, and they still stuck with the stuff. So I view this as a non-story. I suppose if you see more companies moving in this direction, maybe that's problematic. I don't know if you guys think otherwise. Let me know.
U.S. corn shipments surpassed pre-report expectations last week. USDA reported that 60 million bushels of corn were inspected for export during the week ending September 11th. The print was up 4.7% compared to the previous week and up a whopping 166% versus the same week last year. Soybean shipments also exceeded expectations at 30 million bushels. The print was up 72% compared to the prior week and up 70% versus the same week last year. Wheat shipments, they also surpassed expectations at 28 million bushels. The print was up 76% versus the previous week and up 28% compared to the same week last year.
The soybean shipment print is pretty impressive considering we're not sending anything to China. The buyers or takers of U.S. soybeans last week included, looks like Indonesia, Mexico, Taiwan, a whole bunch of different countries aside from China. So some other global buyers are coming in and picking up the slack. Corn shipments, fantastic. I mean, look at where they were last year versus this year. Very, very strong. Even wheat, very good. So just excellent week of shipments.
USDA reported a flash sale of corn yesterday. Exporters sold 6 million bushels of corn to unknown destinations for delivery during the 25-26 marketing year. Accumulated net corn sales for the current marketing year are up a whopping 69% compared to the same period last year.
Yep, it's early, but we are on pace to hit or perhaps exceed USDA's projection for corn exports this year, which is pretty lofty. What did cattle do yesterday?
Cattle futures bounced back yesterday after a rough week last week. Live cattle were 382 to 470 higher. Feeders saw gains ranging from 577 up to 870. USDA did report a case of the bird flu here in a dairy herd in central Nebraska. It will be interesting to see if that impacts the markets here as we open this morning.
Yeah, we'll see. Outside market's pretty quiet. The Dow's up 11 points. The S&P's up about 12. Treasuries are flat. U.S. dollars off just a little bit. Crude oil is about flat, 63.25 in the October WTI last trade. Have a great day, guys. We'll be back on Wednesday.